Good morning, students. I, Yurajsinh Rathod, Assistant Professor, Department of Management and Commerce, Rai School of Management Studies, Rai University, Ahmedabad. Today I am going to start Unit number 3, Subject Financial Management. The name of the unit is Dividend Policy. So, we are going to start with our introduction. What are dividends? First of all, we are supposed to learn about dividend. What is dividend? Dividend are the important aspect for any business organization to increase their value of the firm. Dividend is the portion that redistributing by the companies from the profit to the shareholders as a reward for their investment. If company giving dividend on a regular basis, so it is considered as a pride moment for any organization who are providing dividend on a regular basis. So if the company are providing dividend on the regular basis, the prestige of that company in the market supposed to be increased other than the company which are not providing dividend on a regular basis. Going to the next slide. Here some of the examples are mentioned who are regularly paying dividend to the shareholders. First example is Reliance Industry Limited. They are regularly, consistently pay dividend to their shareholders. Second example of the Tata Consultancy TCS. TCS is also providing dividend on a regular basis to its shareholders according to their profitability and dividend policies. Third example is the HDFC Bank, one of the largest private sector bank which also provide regular dividend to its shareholders on a regular basis according to their policies and profitability. Going to the next slide. Here we learn the concept what are the retained earnings. So in the business organization, if company making profit, that profit is distributed in two forms. One is dividend and second is retained earning. The term retained earning refers the amount of money which company kept and they are having the purpose not used for the any other thing. So profit of the company is distributed in two forms, retained earnings and dividend. If company pays the dividend to the shareholders, the retained earning portion is supposed to be reduced. So retained earning is the that portion of the profit that company take back for the future operations of the business organization. So retained earning is the amount accrued over the years that has not been reinvested in the business or distributed to the shareholders. Here the example of retained earning is given. XYZ Limited in the financial year 2021-22 report a net profit of 10 crore after accounting all the expenses and taxes. If company provide 2 crore rupees dividend, so company's retained earning is 8 crore as mentioned here. So the profit of the organization is divided into two parts, retained earnings and dividend portion. If company pays out dividend, the portion of retained earning is going to be reduced. Here the example is mentioned, 10 crore rupees of net profit of the organization after all the taxes and the other costs and expenses. If company distributed 2 crore rupees as a dividend, the retained earning of the company is 8 crore rupees. So the XYZ Limited continues to generate the profit and choose not to distribute all the dividends or reinvest that money in the business organization. So retained earning is that portion of business organizations they reinvest in the business organization, and that money is really important for any business organization for their future obligation, future contingent liability and other expenses to be paid in the future. So if the company has good retained earnings, they are not dependent on the external sources, so they can use their own retained earned money for the future operations of the business organization. How dividend affect the retained earnings? As in the early slide we learn or we see that if company provide dividend to the shareholders, the portion of retained earning is supposed to be reduced. Here one example is also given. Company has 1 million in retained earnings and issue 50% dividend on all the 5 lakh shares outstanding. The total value of the dividend is 0.50 into 5 lakh shares. The amount of dividend is $2,50,000 and the amount of retained earning is $7,50,000. So we can see that when company provide dividend to the shareholders, the portion of retained earning is supposed to be decreased, and when company undertake retained earning for the future purpose, the portion of dividend is supposed to be less in the business organization. Prolonging back of the profit. The prolonging back of profit is the technique of the financial management under which all the profit of the company are not distributed amongst the shareholder. Some of the portion is retained by the business organization for their future operations. Company using this profit or these retained earnings for the future operation, business expansion, assets acquisition for the future technological changes are happen in the business on a frequent basis, and that is what the reason why company are retain their money and uses that money in the utilization of business for their future goals and their future operations. So it is known as prolonging back of the profit. Moving forward to the financial manager may treat the decision in the following ways. So for the financial manager, dividend decision is classified into two ways. One is the long-term finance decision. So finance manager use dividend decision as a long-term financing instrument. Business organization raise their capital from equity stocks, and from equity stocks they generate the capital to running the day-to-day business activity. So here first financial manager see is as a long-term financing decision, where finance manager use this tool as a long-term source of finance, where they acquire the fund from the market through equity shares. For that, initial public offer is done by the company in the stock market. Second is wealth maximization decision. Financial manager also sees this decision as a wealth maximization decision. If any organization pay dividend on a regular basis, this is very prestigious movement for any organization. Because of that, the market value of the company is increased, and because of that, per price share of the shareholders are also going to be increased. So it creates good impact in the market for any business organization who are providing regular dividend to their shareholders. So when the market share of any company or any institute is increased, it's directly increase their or increase the wealth of the shareholders, because per price share is increased, so shareholder wealth is also increased because of this. So this is the financial manager aspect on dividend decision. Now we are going to see the factor affecting dividend decision, most important aspects. First factor is maintenance of reserves. So in the business organization, reserves and provisions are kept from the profit, and if any business organization is kept reserves and provision for different purposes as mentioned here: working capital, bad debts, dividend equalization, expansion, bad debt reserve, depreciation provision. If the business organization is going to kept reserves and surplus from the profit is reduced to that extent, and the company using surplus available after capturing this reserve and surplus. So this decision is directly affect the division of the business organization. When we kept reserves and surplus from the profit is going to be reduced, and on the remaining profit the company is going to be distribute the dividend to the shareholders. So this factor is important factor in the dividend decision. Second, existence of earned surplus. Company cannot pay dividend from the capitals. Company only issue dividend on the profitability which company earned during the year. So dividend is cannot be paid on the capital. Dividend is always paid on the profit. So if the company having the profitability in current year or accumulated profit in the business, then and then only the company is supposed to issue the dividend to the shareholders. There is no compulsion for the companies to issue dividend to the shareholders, equity shareholders. Third factor, cash needs of the business and company. Cash position is the big criterion for any business organization to pay their day-to-day business obligations. So here, first of all, we understand the need of the cash for the business organization to pay their day-to-day business liability and other requirement of the business. Then we are supposed to prepare our dividend policy. So the need of cash for business enterprise is the important aspect to decide the dividend policy. So first of all, we supposed to learn and to prepare the plan of cash needs of the company, and then we going to prepare our dividend policy accordingly. We are going forward to the next point, need for growth and expansion. A company is quite likely brought into being the remain stagnant. Every company's goal is to increase their business organization, maximize their wealth, growing their business in different cities, different state, nationally, internationally. So every business organization is having need for growth and expansion. And if company wants to need to grow more and more and they want to expand their business in different cities, they retain their money from the profit. And when the business organization retain more profit for business future growth and expansion, the remaining profit is supposed to be distributed as a dividend to the shareholders. So these factors also affect the dividend decision of the business. Next point, steady and stable dividend policy. If company provides stable and steady dividend to the shareholders, it creates good impact in the mind of investors. As a potential investor, I see that which company provide regular dividend to its shareholders. When I invest money in particular company, so I expect the particular company provide me the dividend on a regular basis. So stable and steady dividend policy of any business organization is the important aspect in the dividend decision. If the company regularly pay dividend to its shareholder, it create a good impact in the market, and the potential investor are supposed to be invest their money in the company. Our next point is government taxation policy. In this day, corporate taxation is very important factor to consider dividend decision. If tax rate is high on the dividend, company is not supposed to pay dividend to its shareholders. They retain their money over a dividend payout to the shareholders. If the tax rate on dividend is less, company is going to pay the dividend to its shareholders. So here the impact of tax is most important in the dividend decision. When the tax rates are higher on dividend, so company is going for the other option to retain their money. And if tax rates are low, so company is supposed to provide dividend to its shareholders. So taxation policy of government is also impact the dividend decision of business organization. Moving forward to next point, legal restriction. If government imposed any legal restrictions to the company on dividend rates, so it is not in the hand of any business organization to provide dividend to its shareholders. So legal restriction is one of the important aspect for any business organization to consider. If government imposed any kind of restriction on rate of dividend, so company is supposed to pay that much of rate to the equity shareholders. Next point, dividend restriction by creditors. Company are using long-term finance from various sources of the fund. When granting long-term credit may restrict the rate of dividend payment. When the business organization take loan from the institutions or from the bank, or they are taking long-term credit from the creditors, so sometimes they restrict the rate of dividend payment, or dividend rate is supposed to be restricted by these creditors. So company cannot dictate by the lenders, restrict the management is declaring dividend as they intend to do. So the business organization is not able to pay dividend rate they want to pay to the shareholders because it is restricted by the creditors. So this is one of the important aspect where the dividend restrictions are done by the creditors, because they are the capital provider to the business. So the management is supposed to take this decision very seriously of dividend payment. Next point, fixed assets replacement provision. While any business organization want to replace their assets, it's required huge money and huge cost to replace that business assets. So when you want to replace your assets, fixed assets, it's required huge fund, and for that you are using your retained earnings. When company using their retained earnings and they are taking retained earnings more from the profit, the dividend payout of the company is supposed to be reduced. So assets replacement provision is one of the important aspect in your dividend decision. So these are the major factors that affect the dividend decision in the various ways. Thank you, student. I conclude for the today's session. Thank you.